Good morning, pre-market futures right now, 5:45 a.m. Pacific Standard Time, 12/2/2011. Happy December and Merry Christmas to all. And the topic, low volume, that's number one. Okay. Bid and the ask ratios. The time and sales, people were buying at $500, where we would short, as that would be your short. And then what happens is in pre-market, when you learn how to square a pre-market futures tape in the bid and ask level, and what is it? It's this right here. And how do I become, instead of being victimized and buying at the $500 pre-market value, you would be the one selling short that $500 value and then getting back over here as an SMF market maker and buying back that position, and you would be making money even at 497.45. You still have a markup. The short is working, but you can learn how to work this bid and the ask, and you can, and we will show you how. There is a market maker script within the price action organizational part of it all as to how you make markets with the public buyer and the public seller. That's what the school is about. Selling short back up here, as I was saying, the last print was 496.20, and then short came in right here at 498 and did 200 shares within the very low volume structure of the time and sales print in pre-market on a monthly jobs report to boot. On low volume, we will be happy to let you know, once again, we're going to bring it to you live. It will change at the opening bell. The closer you get to the opening bell, the spreads in the bid and ask will change. Please stay tuned to pre-market futures. How do I take the pre-market futures, apply the pre-market futures to the opening bell? This is the part that you would like to learn. And this is a part of understanding risk management position entry with volume management training within those entries, and your stop management will apply as well. How do I steal that bid, and how do I sell the ask? Or how do I sell the ask and buy the bid lower? How do I apply that in a low volume environment? And you have to know what the procedures are to be able to do that. Now, you had someone that shorted up here at 498, and then they bought it back right here at 49.97 right here within $100 increments. So they just, once again, you sell that there and you buy this back here. That's the money you just made right here where my pointer is, and that's the print. 8:47 a.m. Eastern Time print, and the time it sells. So, once again, happy December, happy jobs report, and happiness within that bid and that ask and making a market and applying market maker management versus trading management. Market maker risk management, I'm a buyer and I'm a seller all day long. That's the part that you want to learn. That's not out here. Here's some gaps right here. The gap open ratios are taught in all stocks in pre-market. How to trade price line is this feature. How to trade the bid and ask using low volume environment. How will that apply to the options market? How do they steal premium in the options market relative to low volume? And how do I trade those, and how do I get my entry management relative to my capital dollar risk management, which will equal how I'm going to sell back to the public for a profit. Once again, we have many new services coming in January of 2012. This will definitely be one of them.